Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, talking about your home, your health, your family, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. So as we wrap up the year today, Brent Wilsey is here with his financial outlook for 2026. You going to have some good news for us, I hope?
We do have good news. And 2025 is now over, and it was good for most investors.
Yeah.
They did pretty well, except for maybe residential real estate, and probably Bitcoin didn't do so well, but everything else did pretty well for people. So now you got to say, well, what should I do for 2026? You got to look at the fundamentals that make up the economy, and one of those is inflation.
Right.
And the good news is inflation, we see it being about the same areas in now, like 2 to 3%. We do know that the tariffs were supposed to cause high inflation, a recession in 2025. That did not happen.
Seen it.
They'll not be a factor in 2026. Now, I do have to point out that in January, the Supreme Court will release a ruling on did the president have the right to impose those tariffs. So 3 things can happen there. One, they can say, no, he did not. They got to reverse them. That'd be a big problem. Number 2, yes, he had the right to do it. Or number 3, I think is the most likely scenario. He had the right to do it, but he had to maybe get congressional approval or something.
Right.
You got 6 months to meet these other things. So that could be something that would happen. But I think it's not going to move the markets. I think it's going to be number 2 or 3.
In any of those scenarios, you don't really see it as being a concern. I mean, we're not going to spike up in inflation again. Of course, interest rates a big concern, and we had a couple of cuts this year. What do you see moving into 26?
Probably another couple of cuts next year. I mean, right now the federal funds rate is about 3.5 to 3.75. We'll probably see a fall to 3 to 3.25. What that benefits, there's about $15 trillion out there in credit cards and auto loans and HELOCs and S-blocks and all these different short-term money. That's really going to benefit the consumer, because as rates fall, they're going to be paying less on that, more money in their pocket to purchase more items for the economy. So that's going to be a positive. I have to point out, it's not going to be beneficial for real estate, because what I'm seeing, unfortunately, in the economy, longer-term loans, there's a lot of demand for that, public and private sector. The higher the demand, it's going to push rates up, not going to push rates down. So short-term, long-term rates are different, so I'm concerned about that. We may not see the 10-year Treasury fall below 4. Probably see mortgage rates about the same as there is now, so I'm kind of concerned on the debt market next year.
Okay, let's talk about something that's always a concern for people in San Diego: energy costs.
Oh yes, energy costs. Energy costs, that's a big positive. I mean, right now the oil's about $58 a barrel. We think that will maybe fall more. We do have, I think after 4 years now, the Russia-Ukraine war, maybe that ends next year. Hopefully it does. That would put more on the market, so maybe we see oil drop to the low $50 per barrel. Now, right now, nationwide, it's about $2.85 a gallon. Unfortunately, we live in San Diego, California.
Not in this part of the nation, it's not.
The average is about $4.50 a gallon. I will point out, by my house in Rancho Bernardo, on Rancho Bernardo Road, $3.99 on an Arco station there. So that's where you got to go to get your gas.
$3.99 at Sinclair on Scripps Poway Parkway.
There you go.
So there you go. We're shopping in the right places. The job situation, employment is always a concern. How does that look going into the new year?
Jobs looks like it'll be pretty well as well. And another thing will be kind of stagnant. We don't see any big, unemployment or any big employment coming in. We do have some things coming in next year for the economy. All that money that's coming into the country, that should hopefully stimulate the infrastructure, get some jobs there. I think for college graduates, it's not going to be a good year. Those are not the jobs. So it's really going to be good jobs are the labor jobs, plumbers, electricians. Labor is going to be the big jobs there.
So got to ask you to summarize this kind of quickly. What does this all mean to investors moving into the new year?
We should see a good stock market next year, but be careful. About 40% of the S&P 500 is technology, very expensive. That could be the year that it doesn't do as well. A lot of good buys out there. Gold and silver, fear of missing out. I can't tell you if it's going to go up or down. Be very careful with that. And Bitcoin, I don't see much going on for Bitcoin either. Bitcoin is just a bad year for Bitcoin.
I know you're not a big fan.
Not a big fan at all.
Overall, optimistic for the new year?
Yeah.
Okay, good.
Do the right investing, smart investing.
Smart investing, wow. There should be a website that's maybe called smartinvesting2000.com where you can get more information. From Brent, we'll be right back with more Good Business San Diego.